Good morning. You're watching All You Need to Know on Bloomberg Quint Live, and I'm Alex Matthew. First, the headlines this morning. Asian markets are off to a weak start after sovereign yields on Wall Street slumped to a multi-year low, sparking a fall in the equity markets there. The Jalan committee panel that was set up to review the RBI's economic capital framework may not recommend a large transfer of reserves to the government. That's a Bloomberg Quint exclusive. Transfer of its distribution business led to Sun Pharma's profit halving in the January to March quarter. Numbers were below estimates on all counts. Mahindra & Mahindra, along with Power Grid Corporation, will be the two nifty companies reporting earnings today. And angel investor Sachin Bansal will be increasing his stake in electric scooter maker Ather Energy. The company will get a fresh fund infusion of $32 million from him. Let's talk about the US markets now, and significant trends emerging there. They resumed trading after the long weekend on Tuesday. It was a week's end to the day's trade, with benchmark indices ending near the lowest point of the day. Lack of clarity on talks between China and the United States continues to be a sore spot for investors. Renita Young of Bloomberg News brings you this update.
U.S. markets closed lower on Tuesday after a session in which we saw stocks fluctuate between gains and losses as investors tried to position against a protracted trade deal between the United States and China. Now, this is also happening as the U.S. President Donald Trump says that the United States is, quote, not ready to ink a trade deal with China just yet. As a result, that sent the U.S. 10-year treasuries higher and the 10-year yield lower to its lowest in more than 19 months. A little bit more economic news to give you another view on how the U.S. economy is doing. We did see home price gains in 20 U.S. cities slow for the 12th straight month, and we do have more data coming later this week in the form of the first quarter revised GDP figures that will be in on Thursday. Meanwhile, we saw quite a few movers in Beyond Meat partnering with a European company to produce its products in Europe. This marks the first time it's able to do so for the plant-based products outside of the United States. And we do have JP Morgan saying it will be a, quote, extraordinary opportunity for the company going forward. Apple's back in the news as it buys a digital health startup, as well as launches its new iPod Touch. However, it's seen as a lowered target by Citi, which says that the trade war hitting China could impact sales. Also, Cohen says that Apple's earnings could fall about 26% in the fiscal year 2020 if China bans sales of the iPhone. And lastly, we saw Advanced Micro Devices back in the news as shares rise after its CEO announces new products, with analysts saying that those products are promising for its near future. And that's a look at your Tuesday Wall Street action. In New York, I'm Renita Young for Bloomberg News.
All right, let's turn to the Asian markets now. I've got Rosalind Chin, who's joining us live from Bloomberg's Hong Kong studios. Morning, Rosalind. Not the best starts, I would think. How is it looking in a more granular sense?
Well, yesterday did not look too bad here on the Asian markets, but yes, they are following Wall Street lower here, with the MSCI Asia Pacific Index losing 0.7%. Really, no argument today about which direction the stocks are going in, and that is down right now. Now, of course, we've had a bit of a flight to safety here. We've got investors seeing warning signs re-emerging in the bond markets. We've got sovereign yields sinking to multi-year lows. Australia, the 10-year yield fell below the central bank's benchmark rate. We've got Japan's 10-year and also the New Zealand 10-year also falling. New Zealand's fell to a record low, in fact, and US, of course, 10-year treasuries at the lowest level since October 2017. Investors are getting slightly concerned, perhaps, about the global outlook. We see those trade discussions between US and China remaining a drag on investor sentiment. Everything seems parceled around that at this point in time. Some of this risk aversion potentially, possibly, partly triggered by Trump's comments that a deal with China is not imminent, and of course, even in Europe, there's a lot of political and economic uncertainty there. This morning, we did see the U.S. Treasury dodging further escalation in the trade war between the U.S. and China, as it did not label China a currency manipulator, but it did say it was deeply disappointed in China's lack of transparency. So, around the region, we've got the Nikkei losing more than 1%. Topics also about 1% lower, basically halting a 3-day advance there in the topics, with electronics and automakers faring particularly badly. Over here, the Hang Seng's just opened for trade a few moments ago, down 0.5%. Shanghai Composite down by almost around the same amount. Australia, financials leading lower there. And we've got JP Morgan, who earlier today forecast the RBA will cut its 1.5% benchmark rate by a full percentage point by within a year, basically. That, of course, is affecting the Aussie dollar, currently at 69.27. And the one stock, though, I want to point out in Australia, Linus, up by 9.6% right now, and that is a rare earth company, one of the few companies outside of China that makes rare earth products. And this, of course, getting a big boost, as it does seem that there's more and more indications from Chinese media that Beijing is gearing up to use its dominance in rare earths as a counter in its trade discussions with Washington, and it's starting to sort of arm itself with possible ways to hit back at possible further trade tariffs if this continues. So, as I said, a lot of these things wrapped up in these trade discussions, or the stalled trade discussions, and a bit of gloom descending on the markets today. Back to you.
Absolutely. Thanks so much for that, Rosalind. Well, that is the big headline. The trade tensions continue to pose problems for the market and affecting investor sentiment. They're also worrying analysts. Morgan Stanley chief economist Chetan Iyer warns that the escalation of the trade war for the next few more weeks will definitely hamper global growth. Speaking to Tom McKenzie of Bloomberg News on the sidelines of the Morgan Stanley annual conference, Iyer said that the US will likely slip into a recession if higher tariffs are slapped on all goods imported from China. Listen in.
It's another 3 to 4 weeks before which you can actually prevent any damage to global economy. If it continues for more than that, then some damage to global growth outlook will be inevitable.
And in terms of the picture where we get the US imposing tariffs on all Chinese exports, so 25% across the board, which of course President Trump has threatened, what does that mean for your growth projections?
So in that scenario, we think that global economy will be hitting recession. Either it will go below 2.5% year on year. Right now it's clocking 3.2%, so we could easily dip below that to about 2% by 2020. That's the risk that we are watching.
2% by 2020. Okay, and in terms of how this plays out for both the US and China, which country is going to be most impacted, and across which sectors?
So we think it's going to be both, but in terms of the levels of growth rate, the US has lower buffer than China. So clearly, in terms of recession, it will be the US which will be going through a proper recession. If you see that kind of a scenario where there's tariff on all goods imported from China, of course there's going to be a reaction from China too. So we build that into numbers, and so US will probably be hitting something like 0.2% in 2020 in that scenario where you see global recession, and China will probably lose about 1.5 percentage points of growth in that scenario.
So US in recession by 2020 if we get tariffs across the board on all Chinese
actually
exports.
The recession numbers will come through by first quarter of 2020 itself.
In terms of the lines that we've heard, in terms of the Treasury Department saying that, look, we're not going to label China as a currency manipulator, do you see that as a positive in terms of the trade dynamics? Is this a way of the US giving a nod to China and saying, look, the door is still open?
Yeah, absolutely. I think that's definitely sending a positive message. But I think we also have to see what China is doing in reaction to whatever measure that the US has taken. We know that China is not really importing a lot from the US, and so we are watching very closely on what is China doing on non-tariff barriers. Recently there has been talk about some constraint related to rare earth material being sent to the US and whether there will be any restrictions on that. So we are watching right now whether China is going to take additional measures on non-tariff front, which could potentially escalate the trade tensions again.
You know, taking the point that Chetan Iyer was just making on rare earths, China could be gearing up to use its rare earth dominance in its retaliation to the tariffs imposed by the US on its goods. Sharon Chen of Bloomberg News tells you more about this.
Yeah, that's how it looks on the surface for sure, that, this coordinated effort. We had the NDRC official last night saying that China isn't going to let the US use the products that it makes from its rare earths to contain China. And then we had commentaries today in the People's Daily and the Global Times echoing that same line. It's hard to tell, if it's if it was coordinated from the top or whether it's just state media echoing what was on TV last night. But what is not there's no doubt about the fact that China is sending this signal, though, that it's ready and willing to use the rare earths as a tool in the trade war. Obviously, there would be a nuclear option, just like what the U.S. has done with Huawei. And it's yet to be seen whether that will actually happen or whether China is just wielding the threat right now.
Yeah, that's a good point. Can China actually afford to take the trade war nuclear, as you say?
Yeah, I mean, we've seen industrial output slow and retail sales and exports as well weaker than expected. We'll get a better sense of the state of China's economy on Friday when we get PMI numbers for May. But China's economy is also slowing. Obviously, the trade war hurts both sides. China's also leaned very heavily on stimulus at this point, and at a certain point, that's going to be insufficient, and China's going to have to figure out just how far it can go with the U.S.
All right. Well, that's the situation as of now. Remember, if you weren't aware, rare earth is used in the manufacture of several things, including your smartphone. I'm going to turn now to Agam Vakil, who will tell you all about the day's trade, what to look forward to, and what's happening in the futures and options space. Morning, Agam. A little volatile yesterday. How are we looking today?
Well, we're likely to see the same, more or less, Alex, because yesterday eventually we closed the day with not too much movement. And as far as today goes, well, as you can see, there's about a 19-point cut here, and it really isn't indicative of anything at all when it comes to the benchmarks. And coming down to the Nifty again, it, like I said, was flattish, and we didn't see too much of a movement in the mid-cap or the small-cap indices. But when it comes to the banking indices, a little deeper in cut as far as the Nifty PSU banking index is concerned, so we'll be watching out for that. And moving on to your ADRs, we've seen some weakness across in Wipro, ICICI Bank, and Tata Motors. And moving on to the other stocks, some gains in Vedanta and HDFC Bank. But as far as your other factors go, well, we saw about 500 crores worth of stock being sold by the FIs yesterday, and we saw about 269 odd crores come in off from the DIS front. Now, moving in, we also have contributors, and we haven't really seen too much movement considering it was a relatively flattish day. Coming down to futures and options, it's expiry week, so well, as you can see, 40% in terms of rollovers, as you can see, 37% in rollovers for the Nifty Bank, and coming down to your open interest distribution, again, it's largely the same, where we've seen 12,000 calls, the one with the max OI, followed by 12,500 on the upper end. There's plenty of resistance there. And the most active option, of course, here was 11,900, the call as well as the put. Moving on, the wicks, of course, came off, but now it is considerably lower than the 4-year high that we saw off late earlier this week. And moving on, we have the put-call ratio, which is at around 1.27. Not much has changed there. And, well, Adani Power and PC Jeweler are in the F&O band, along with IDBI Bank, which moves out of the F&O band. And other stocks, we have BPCL, Wipro, and Coal India, and Focus, considering an increase in open interest. And in terms of unwinding, we have Chennai Petro, IDBI Bank, and Adani Enterprises. So we'll be watching out for that, but we're expecting a little more consolidation, Alex, now that a lot of major events are out of the way.
Thanks so much for that, Agam.
Yeah.
Well, on to the big story, in fact, overnight. The government's hope of getting a large chunk of the RBI's existing reserves may not come to pass. The 6-member panel, headed by former RBI Governor Bimal Jalan, may recommend some tweaks in the economic capital framework of the Reserve Bank of India, but that need not lead to a large one-time transfer. Nikunj Ori, who's spoken to a person familiar with the deliberations within the committee, reports on this exclusive story.
The panel set up to review RBI's economic capital framework may not recommend a large transfer from the RBI's existing reserves to the government. While the panel may suggest tweaking of some of the rules used to calculate RBI's surplus, this might not lead to a significant one-time transfer of the RBI reserves to the government. However, this could lead to an increased payout of the dividend that the RBI transfers to the government every year. However, the amount is not expected to be significant. The panel headed by former RBI Governor Mr. Jalan is expected to meet next on June 12 to finalize its findings and before it submits the report to the Reserve Bank of India. Most of the panel members, except Finance Secretary Mr. Subhash Chandra Garg, are of the view that there shouldn't be any significant relaxation in the formula that's used to calculate RBI's capital needs. Most of the panel members are of the view that market risk parameters that are used to judge potential risks from debt market and forex volatility can be slightly relaxed, but this should be done at the cost of tightening other parameters like judging potential credit risks. Over to you.
All right, so you definitely have to look out for the bond yields. They're currently just around that 7.15% mark, the 10-year benchmark, but they could be impacted based on how this plays out and what the report actually says. Remember, this is an exclusive as of now. The report has not been officially released. Let's head over to earnings now. Mahindra & Mahindra is looking at a weak fourth quarter as estimates suggest lower tractor and auto volumes may dent the company's margins this quarter. Yatin Motor tells you everything that you need to watch out for in those numbers.
Mahindra & Mahindra will be the final large cap auto company to report their quarterly earnings. We have seen with other auto companies which have reported weak volume growth, and not only that, the margin performance also has been muted. Similar is the case with Mahindra & Mahindra. We are expecting revenues to be almost flat at little over 13,000 crores. As far as absolute EBITDA is concerned and profits are concerned for Mahindra & Mahindra, they are seen declining by 18% on a year-on-year basis as far as the Bloomberg poll is concerned for M&M as well as MVML entity. Margins also for M&M plus MVML entity are seen at 12.2% versus a level of 15.1%. And the margin contraction is on the back of flattish volume growth that we have seen on a year-on-year basis. Of course, in the fourth quarter, we had new launches for the auto segment, which led to a flattish growth there. But if you look at the tractor segment, we have seen a 14.5% volume decline year-on-year, and clearly that will be eating into the margins as well as profitability on a year-on-year basis. As far as the key issues to watch out for will be the management commentary on FY20 guidance on tractor sales as well as auto sales. How exactly are they looking at these two segments with respect to the onset of monsoon, because that is a key determinant factor for Mahindra & Mahindra for their tractor segment. And more importantly, the update on new launches, especially with respect to BS6, as to how really is the transitioning happening for Mahindra & Mahindra automotive segment. So these are the few things that we'll be watching out for as far as Mahindra & Mahindra fourth quarter earnings are concerned.
Lots of important stocks today to look at and some important earnings as well. The first set of numbers we're looking at are coming in from Sun Pharma, which missed estimates due to a one-off adjustment. The revenues are up 3% at 7,164 crores. Net profits are down 53% at 636 crores. EBITDAs are down 40% at 1,017 crores. And margins stand at 14.2% versus 24.1% last year. There was a one-time impact of 1,085 crores related to change in distribution of the India business. Now, it impacted the top line and operational performance of the company. Sudhir Walia steps down from post of whole-time director to non-executive with effect from May 29th. Then we have NMDC, which put up a strong show. The revenues were down 6% at 3,643 crores. Net profits are up 32% at 1,454 crores. EBITDAs are up 10% at 2,092 crores. And margins stand at 57% versus 49%. There was a steep decline in employee expenses, royalty and other expenses that aided the operational front. Then we have Aurobindo Pharma, which came in with strong results. The revenues are up 31% at 5,292 crores. Net profits are up 11% at 585 crores. EBITDA is up 32% at 1,060 crores. And margins stand flat at 20%. There was an exceptional loss of 36 crores in the current quarter. And the board approves amalgamation of its 6 arms with itself. Make Money Organics clarifies the news of fire breaking out in its Dahej plant, which is being circulated on social media, is fake and no such incident has taken place. The company says it has filed a police complaint in Ahmedabad. Make Money plans to expand its agrochemical production capacity by 10,800 metric tons at the cost of 127 crore rupees. The project will contribute a turnover of 200 crores in a full year of operation. Lastly, Great Eastern Shipping is going to consider a share buyback on June 1st.
Thanks so much for that, Mishika. Well, let's have a look at some of the stories that you'll find if you look up the website bloombergquint.com. Some of you have been asking about Sun Pharmaceuticals. The earnings came in yesterday, remember. They were a miss on all parameters. You'll find a detailed story on the website bloombergquint.com. Now, here are a couple of others. Ather Energy has raised $51 million in a fresh funding round led by Flipkart co-founder Sachin Bansal as the electric scooter maker plans to scale up its operations. Bansal, who is also an angel investor in the startup, will be investing $32 million into the electric scooter maker. This will be his second largest investment in a mobility startup after he invested 650 crore rupees into Ola earlier this year. Angela Merkel's succession plans are in trouble, apparently. Germany's leader has decided protege Annegret Kramp-Karrenbauer isn't up to the job, according to people familiar with the matter. AKK, as she is known commonly there as, oversaw the CDU, that's the party's worst ever result in national elections over the weekend, and her diminishing popularity leaves the Chancellor more determined to stay in power until her term ends in 2021. All right, that's all you need to know going into trade today. Do stay tuned. There's a lot more coming up over the course of the day on Bloomberg Quint. Thanks so much for watching.